look at that. Tom Lee was correct again. CPI came out lower than expected and stocks ripped higher. The S&P and the Nasdaq both notching new all-time highs today. Fundstrat says April CPI shatters the inflation accelerating camp, meaning the number of Fed cuts by year-end 2024 starts to drift higher towards 2 to 2.5. The three most recent CPI reports surprise consensus with large swings in many categories, highlighting not only the challenges of seasonal adjustments, but also clouding the true direction of inflation. So indeed, maybe it is time to buy stocks after all. If you buy stocks the day that stocks hit all-time highs, the S&P or the Nasdaq, you tend to actually have a better return than if you bought on any other just random day. Now, before we get too far ahead of ourselves, there is some things that you need to know coming tomorrow morning with Walmart earnings. Walmart is going to be a consensus thesis changing report tomorrow morning, for good or for bad. It will totally change expectations for a recession and certainly how the consumer is doing. Following retail sales that missed expectations by a large margin, we were expecting positive 0.4% month over month. You came in at 0% month over month. It's really starting to throw a little bit of doubt on just how strong the consumer is and the consumer's willingness to spend. If the consumer's not spending as much, this is going to help put more downside pressure on inflation. Because remember, inflation is just a metric of evaluating the consumer. If the consumer starts to revolt and not spend money as much as they did previously, then you don't see inflation. Inflation does not thrive in an environment when the consumer is slowing down. First things first, this is what Goldman Sachs just said about the CPI report today. Goldman says, based on details in the PPI and CPI reports, we continue to estimate that core PCE price index rose 0.25% in April. We continue to expect the Fed to cut the federal funds rate by 25 basis points in July and proceed with cuts at a quarterly pace thereafter. 10-year Treasury yields are down about 10 basis points today, down to 4.34%. Markets have raised the odds of a July 31st cut from the Fed by 29.2% yesterday to 33.3% today. So you're actually only up like 4% as far as your increased odds of a cut July 31st. There's still a 62.9% chance of no cut in July. September, you're getting more solidified on your cut. 51.1% odds now of a cut coming September 18th. I actually think there's going to be a cut July 31st, September 18th, and likely December 18th. So I'm still thinking we're going to get 3 cuts this year. Markets are currently at 2. There's 37.8% odds of 2 cuts by December 18th, 24.3% odds of 3 cuts, and 25.0% chance of only 1 cut this year. So these CPI numbers, while they are having a large impact to the bond market, as far as the time of recording this video, it's not moving around expectations too much for interest rate cuts by the Fed. Knowledge Vital today says the CPI print is quite dovish. The 20 basis points sequential cooling in the year-over-year rate of change was the largest drop in several months and means the disinflationary process is back on track. Meanwhile, rent is still running quite hot, which means non-rent prices are easing even more than it seems on the headline. If today's gains hold for the S&P 500, the new all-time high will extend the current bull market to 581 days, dating back to its starting point on October 12th, 2022. The index is now up nearly 50% during this bull. Ouch! T.S. Lombard had this to say today. The data is giving confidence in the Fed's plan to cut rates later this year. I doubt current economic wobbles continue, but if they do, the Fed should have cut in March or December. The key lesson to take home, Fed cuts will be late. Ouch! Morgan Stanley said today CPI deceleration adds to the convincing evidence the Fed needs to start cutting soon. We still expect more deceleration ahead, especially in the second half of 2024, and we maintain our call for a first cut in September of this year. We have new updates for the end of the year targets by major banks on Wall Street, or just firms. They don't exactly have to be just banks. The street high is BMO, and they're at 5,600 for the SPY. Wall Street's low is JP Morgan at 4,200, which does show quite a difference between especially EPS estimates, but targets as well. BMO is at 250 for 2024 EPS. And JP Morgan is at 225. Even longtime bear Mike Wilson has a 4,500 price target on the S&P 500. So that's pretty interesting, given stocks are now breaking out to a new all-time high today, at least for the NASDAQ. The S&P is also at a new all-time high at about 5,300. So most of those price targets I just mentioned, well, they're already exceeded. These are all reasons why I think tomorrow's earnings from Walmart is going to be so important, because let's be honest, if there is any company out there, period, that can give you a glimpse on how the consumer is doing, it is Walmart. Based on how many employees they have, based on how many stores they have, how much foot traffic they get, and the overall reach of the US population that they have. Also worth mentioning is like Apple, for an example. Apple, yes, sells their products to people, but they mainly sell a lot of iPhones through like upgrades and things like that. So other companies are not a great example of how the economy is doing. Apple's not, Microsoft's not, Google's not, Nvidia's not. Tesla's a better example, but I think that is mainly an interest rate problem. And that's why Tesla's deliveries have been slowing down a little bit. But Walmart, that is the company for the consumer. Okay. Now, if Walmart tells you people are slowing down, then that's not great. Now, I don't know how much of a dire warning they could give. It's possible. I mean, we'll have to see. It's really a toss-up. Walmart could say people are doing okay. They're doing fine. There's so many different outcomes that we could get from Walmart's earnings. And I think the markets will pay attention, because if Walmart is warning about the consumer, they did that in August of 2007. And anyone that was around invested during that time knows that Walmart was like the first company that put the markets on notice about the consumer and about the consumer slowing down. And I think that is happening right now. So I think we're going to hear the consumer slowing down, and, you know, bucket sizes, basket sizes, checkout amounts are getting lower, and probably Walmart reduces their full year profit expectations as well, kind of what happened back in 2007. And I think the markets might wake up tomorrow and say, oh crap, the economy is not nearly as strong as we thought. And this could actually have an impact in the bond market as well. Judging off of retail sales numbers that came in today, well below expectations. The expectation was 0.4% month over month. You came in at 0% month over month. So not negative, but pretty dang close. And the next revision is probably going to take that number actually negative. So you are definitely on a path of the consumer slowing down. I mean, just take a look, right? February, you came in at 0.7%. March, you came in at 0.6%. April, you came in at 0%. Next month's probably going to be a negative number. So this retail sales number just kind of added to some of my worries about the consumer. It definitely didn't make things better with retail sales missing expectations by that much. And I do think whether or not the markets pay attention to Walmart earnings tomorrow, whether stocks broadly react to it, I think you want to pay very close attention, because Walmart is the best leading indicator. There is no better leading indicator than Walmart. If Walmart has troubling things to say, that's something, take that as a warning that stocks at all-time highs are not going to last. The economy is not going to last. The Fed's going to be too late to cut rates, and we're probably going into recession. That's how I will take a cautious Walmart tomorrow. Now, if Walmart says things are just fine, then I think it's a time to get reallocated to interest rate sensitive stocks, because that's the area that will be next to benefit when inflation does continue to fall and if the economy holds up. That's how important I think Walmart is tomorrow. I think Walmart is a thesis changing earnings coming tomorrow for the bulls and for the bears. And that's why markets may react to Walmart a little bit more than they do normally. Coming tomorrow morning, you will also get building permits, preliminary numbers for April. You're expecting 1.48 million. I'll tell you, the higher the better here, because I mean, more building permits, presumably more buildings, less housing inflation. That's kind of the way to think about that. This number never causes a huge reaction in the market, so I doubt it will this time, but it's worth mentioning. It's highlighted in red. It's a big data point, so we'll see what happens. You're going to get housing starts month over month. These numbers are expected to be positive. Last month you were negative 14.7%. You're expecting a positive 3.8% number. So really that's not that great if you're only positive 3.8% after being negative almost 15% the month before. What will be important as well tomorrow is Philadelphia Fed Manufacturing Index, expecting that number is going to come in at about 4. Last month was 15.5. So that would be a sharp slowdown as well. You will get Philly Fed business conditions. I think that could be an important one to be watching for as well. Philly Fed CapEx index, Philly Fed employment, Philly Fed new orders, and Philly Fed prices paid. Prices paid is a very big component of these district surveys. If prices paid are going higher, then that is usually a negative for markets. Markets typically react to these prices paid numbers. Now, tomorrow morning, and I should mention, all of that data comes out at 8:30 in the morning. At 9:15 in the morning tomorrow, you will get industrial production month over month, expecting that will decrease from 0.4% last month down to 0.2%. Capacity utilization, industrial production year over year, and manufacturing production month over month and year over year will also be coming out. Tomorrow morning, you will get a speech from Fed Barr. He is the regulator for the banks. So he usually doesn't move the markets. He can, but usually doesn't. He's the guy that everyone blamed for SVB, right? For First Republic, for not overseeing what was going on at those banks. So usually doesn't talk monetary policy, but it's possible. Fed Harker will be speaking, coming at 10:30 in the morning tomorrow. That one will be a little bit more important. Fed Mester is probably the biggest one of tomorrow because she is the biggest hawk of basically any Fed speakers right now. Her and Kashkari are super hawks as far as recently. So she speaks at 11:30 in the morning. That will be important. Fed Bostic speaks at 3:50 p.m. tomorrow, and then you will get industrial production and retail sales, as well as the unemployment rate coming out for China at 10 p.m. coming tomorrow. So Friday could be an interesting day, depending on all of this data that we will get tomorrow, and especially with the data coming out of China. So with all of this said, let me know how you are investing your portfolio right now. Are you raising cash? Do you have a lot of cash on the sidelines waiting to see what happens next? Are you going all in here? Are you buying some puts? Are you buying some calls and just balls to the walls? Let's go to the upside. Let me know what you think down below in the comment section and what you are doing in your portfolio. And most certainly, if you made it to the end of this video, hit that like button as well as subscribe to the channel because it's free 99. It costs you absolutely nothing to do so at all. Most importantly, have a great rest of your day, and I will see you in the next one.